Chapter 1. Mind, Method, and Money. Have you ever wondered why not everyone succeeds in the market even when the charts are the same for everyone? Why do some people treat trading as an art while others are consumed by doubt and fear? The real difference is the mindset and discipline that very few adopt. And this is the main essence of this book, that you become the kind of trader who not only knows how to read the market, but also understands themselves. Initially, when a person enters the world of trading, they think it's an easy game. Look at the chart, catch a few ups and downs, and make money. But the reality is the exact opposite. The market is a psychological game. Strategy is secondary. Psychology is paramount. And to understand this mental game, we have to grasp three of the most important things: your mind, your system, and your risk management. The author first tells us a very important point. Successful traders think in probabilities, not certainties. That is, those who truly win at trading never expect to be right every single time. They know they don't have to be right every time, just right in the long run. This mindset helps them survive in the market. If you try to be right every time, you're not a trader. You've become a gambler. The author then talks about the trinity of trading: mind, method, and money. Mind refers to your mentality, how calm, focused, and disciplined you are. Method means your strategy, what kind of trading you do, what your system is, and on what signals you base your decisions. And money means funds and risk, how you manage your money, where you set stop losses, and what lot size you choose. The balance of these three creates a successful trader. And if any one of them is weak, know that loss is certain. Now let's talk about the first part, the mind. When you trade, you are faced with a long list of emotions: greed, fear, hope, and regret. And all these emotions severely influence your decisions. For example, you take a trade, and if it immediately goes into profit, you become overly confident. If it goes into a loss, you either panic and exit, or sink into the hope that a reversal might come now. The author teaches us that a good trader is never emotional. They follow the rules. They see every trade as just a business transaction, not an emotion, not a drama, just acting according to their plan, whether there's a profit or a loss.
Along with this, the author gives us another important point: your trading journal. A journal where you record every trade, why you took it, when you took it, what you were thinking, and what the result was. But learning from the results alone won't get you anywhere. The real benefit comes when you find patterns from this journal. Where are you repeatedly making mistakes? At what times do you become emotional? Which setups have the highest probability of winning? All of this slowly builds you into a disciplined and discerning trader. And then comes self-awareness, the art of knowing yourself. When you trade, the fear, greed, or frustration you feel already exist within you. Trading simply brings them to the surface. This is why if you want to win in the market, you must first fight yourself. Recognize your fears, curb your greed, and correct your mistakes. These things are not easy, but they are what transform an average trader into a professional one. The author adds another important point here. The market doesn't care about you. It has no heart, no memory, and no mercy. This means one thing, clearly. The market is not sad about your losses, nor happy about your profits. The market simply follows its rules. You have to adapt yourself to it. You can't try to mold it to your hopes. At the end of this chapter, the author holds up a mirror to you. Are you the trader who can control their emotions, or the one who is swept away by every greed and fear? Because what you are is what's reflected in your trading account. And until you change yourself, the market will not change for you. Chapter 2. The Mental Battle. Every day, millions of people come to the stock market, some to make quick money, some to pay off debt, and some to make a name for themselves. But very few understand that trading is a mental game, and victory belongs to those who learn to control their minds. The author says that when you start trading, you are actually fighting two wars, one with the external market and the other with your internal feelings. This second war is more difficult because it involves four emotions: anger, fear, greed, and regret. These four emotions destroy most traders.
Suppose you invest money in a stock. The stock goes up a little, and you immediately sell it because you were afraid it might go down again. Or the stock starts to go down, but you hold on to it in the hope that it might go back up. In both cases, the decision was not made by data, it was made by your fear and greed. This is the biggest enemy. The author says that to become a successful trader, you need emotional discipline. This is an art that comes not from books, but from experience and introspection. When you learn to feel in which moment fear is coming, or in which moment you are getting greedy, that's when you can stop yourself. That's why the author suggests an exercise: keeping a trading diary. After every trade, ask yourself 3 questions. Why did I take this trade? Did I follow my rules? Which emotion was at work behind this decision? The author says that when you write this down honestly every day, you begin to bring your mind to a calm, focused, and alert state before you even start trading. A great way to do this is mindfulness breathing or meditation. Sit with your eyes closed for 5 minutes before starting your day. Take a long breath and tell yourself, "Today I will trade according to the rules, not by emotion." Now, let's talk about another important issue: the ability to stop, which is self-control. Most people keep trading until their account is empty, but successful traders know when to stop. When you are tired, angry, or a trade has gone wrong, don't trade for the rest of the day. This is difficult to do, but this step will save you from losses. The author also explains that every trade is a probability. No trend, no setup gives 100% guarantee. But if you work with the right system and follow it with discipline, you will be profitable in the long run. But when we approach every trade with the mindset of, "I have to win," we start moving toward defeat. The author says a wonderful thing: your trading account is a picture of your mind. If your mind is clear, calm, and disciplined, your account will also grow. But if your mind is full of chaos, your balance will also decrease. Now, pay attention to one thing. Trading doesn't mean trading every day, but rather trading only when the right opportunity exists. The market runs every day, but good opportunities come only occasionally. So ask yourself, do you trade out of boredom or do you wait for the right signal?
Here, a mindset shift is needed. You are not a trader, you are a risk manager. Your job is to manage risk, not just to make money. Money comes when risk is managed wisely. Finally, the author explains that if you truly want to make trading your profession, you have to work on your mindset continuously by reading books, analyzing your mistakes, understanding trends, and preparing yourself emotionally. This is the identity of a true trader. So now ask yourself one question: do I just want to trade, or do I want to be a professional trader? If the answer is the latter, you have to train your mind every day, just like an athlete, because the biggest war is not on the chart, but in the mind. Chapter 3: Trading Psychology. Have you ever wondered what a trader's real weapon is? Not the charts, not the brokerage account, not the computer. The real weapon is their mindset. This is the one thing that can take someone to millions or sink them in the mud of losses. Chapter 3 begins here: Trading Psychology, which is the understanding of that inner world from which every one of your decisions is born. We often think that understanding the market is most important, but the author clearly states, first, understand yourself. The most dangerous thing in the market is not the fluctuations nor the fake breakouts. The real enemy is inside us: our greed, fear, anger, and hope. These 4 emotions challenge us every day in every trade. Greed shows you something that isn't there. As soon as a stock takes off, your mind says, "That's it, now I'll make money too." But this is the place where a trader loses their discipline, forgets their trade plan, and embarks on a journey that has no stop, no destination. Then comes fear, which prevents you from entering. You've looked at the chart and understood everything, but a voice says, "Who knows, I might lose again today." Fear forces you to lose opportunities. You repeatedly seek confirmation, and by the time you get the signal, the market has already moved far ahead. Now let's talk about anger. This comes when you have already made a loss, and now there is only one thought: I will get it back. In the grip of this emotion, you don't stop trading, but rather you gamble. This is when the biggest losses happen. And in the midst of all this is hope, which makes you believe every time that you will be right next time, whether you have a plan or not.
The author says here that the most important thing in your trading is the observation of emotions. That is, you look at your own mind like an external observer. Whenever an emotion tries to confuse you, stop, take a breath, and ask yourself, is this decision according to my system or because of my feelings? The next big tool is journaling. Record every trade, why you entered, what time frame did you rely on? Was your mind calm or agitated? Writing all this down helps you understand yourself. The journal is a mirror that shows your behavior every day. And when you look in that mirror every day, your decisions slowly become clearer. Another point beautifully explained in this chapter is visualization. The author says that before starting to trade, see yourself in that trade as a calm, focused, and disciplined person. Feel yourself. If you start the day with a wonderful mental state, your decisions will automatically be stronger. And when it comes to psychology, you have to accept that you can be wrong. This admission is not a weakness, but a strength. The trader who quickly admits their mistake keeps losses small, and the one who thinks they are God exits late and makes a big loss. A very profound message of this chapter is, victory in trading doesn't come from the outside, it comes from inner peace. The calmer, more composed, and focused you are, the more correct decisions you will make. Fear, greed, and anger don't have to be eliminated, but recognized and controlled. And finally, the author also tells us that every trade is a new opportunity to correct your behavior, to apply your rules better. Trading can be a part of your personal growth, if you accept it, not just as a means to make money, but as an internal journey. So, if you truly want to be a successful trader, start by understanding the mindset hidden behind the charts. Because until the mind is clear, your moves in the market will also be unclear. Chapter 4. The Mindset Shift. Have you ever wondered why some traders consistently win while others' accounts slowly dwindle? It's not just about technical knowledge or the art of reading charts. The difference is created where a trader's mindset, their emotions, and their discipline set them apart from the crowd. In this chapter, we will talk about those psychological subtleties that can either illuminate your trading path or plunge it into darkness.
The stock market is a place where a storm of emotions always rages. Fear, greed, hope, and regret, all these constantly batter a trader's mind. After a bad trade, fear stops you. Seeing a rising stock, greed says, buy a little more. And as soon as you buy, the market turns the other way. This is what happens when we trade with emotions. The result is a loss. The author says something very important here. A successful trader is one who understands themselves and their emotions well. You don't have to fight the market, but rather yourself. When the market falls, you have to respond not with fear, but with discipline. When there's a profit, you have to think not with greed, but with logic. The market will remain the same. You have to change your way of thinking. A simple but powerful strategy is keeping a trading journal. Write down every trade. Why you entered. Where did you put the stop loss? What emotions were running at that time? When you put your decisions on paper, your eyes start to open. You start to catch yourself. Oh, I rush unnecessarily every time. This self-awareness becomes your biggest strength. The author says that most traders fail not because they don't understand the charts, but because they don't understand themselves. They consider themselves overconfident. They think, I've profited in 2 trades, now I know everything. But this is where the downfall begins. The moment you start thinking that you can beat the market brings you down to earth.
Another important point is to recognize your triggers. Every person has certain triggers that make them emotional. Maybe your anger comes when the stop loss is hit, or you get very excited when a trade immediately starts giving a profit. Recognize these triggers, because they are what weaken your discipline. In this chapter, the author advises us to focus on the 3 M's: mind, method, and money. We learn about method and money, but we often ignore the mind, even though the mind is the place from which all decisions come. If your mind is not clear, even the best strategy won't work for you. The most effective way to strengthen the mind is routine. Looking at charts at a fixed time every day, reviewing every week, and checking performance every month. All this makes your thinking professional. You start to operate with a system instead of emotions.
The essence of this chapter is if you want to be a good trader, you have to first become a person with good thoughts. Trading will show you a mirror, your weaknesses, your haste, your hopes. But if you accept these and start to correct them, then this market will also give you success. This change begins with small steps, questioning yourself before every trade, learning from every mistake, and most importantly, forgiving yourself. Because no one is a perfect trader, but one can certainly be a learning trader. Chapter 5. The Power of the System. The biggest test of any trading system is when it collides with the reality of the market. No matter how good a strategy you create, if it can't survive in the real market, it just remains a dream. In this chapter, the author tries to teach us that it's not enough to just plan a system. You have to test it, upgrade it, and then build the habit of using it in the market. It starts with the most important element of trading, which is the trading system. A strong system depends on 3 things: entry, exit, and money management. If any of these 3 are weak, the whole structure can be shaken. The author tells us that a good trading system is one that is compatible with your trading goals, personality, and risk tolerance. If you can't sit in front of the screen all day, then an intraday system is not for you. Again, if you are afraid of sleeping trades, then long-term investment will also not be profitable. The author believes that creating a system is not a one-time process. It is a continuous process of learning and adapting. You have to repeatedly review your system. Is it keeping pace with the changed market? Is it causing repeated losses? Or does it only work well in a specific situation? When the system is created, the next step is backtesting, that is, testing it on historical data. But there is a deeper lesson in this too. Backtesting is not just for showing positive results. Its real purpose is to find out in which situations the system can fail. Many traders backtest as if it's a school project, but the reality is that it's the foundation of your trading. If you backtest with wrong data or wrong assumptions, this system can deceive you in the future. Then comes forward testing, which is taking small trades in the real market to see how the system performs in the live market. The author says that relying only on backtesting without real experience is misleading yourself. In the real world, there are emotions, volume, and many other factors that are not captured in backtesting.
The author also says that a good system is not one that always makes a profit, but one that is profitable in the long run. He says, surviving in trading is more important than winning in trading. At the end of this chapter, the author also explains that a system is not magic. It is a framework within which your discipline, mindset, and consistency combine to create real success. If you adopt the system like a religion, it can be your biggest weapon. But if you blindly trust it without testing it, that same system will sink you. In the author's words, a trading system is like a weapon. In the right hands, it protects. In the wrong hands, it destroys. Chapter 6. Technical Indicators. Have you ever wondered how the real movements of the market are captured? Movements that are hidden from the naked eye, but yield the most profit. The real power lies in understanding the truth hidden within trends. In this context, technical indicators allow our eyes to see things that the chart itself doesn't tell us. Indicators give your trading a new depth, like a light illuminating a path hidden in the fog. But this light only works when you know how to use it in the right direction. The author says that most traders use indicators incorrectly. They believe that if an indicator's MACD crosses above, or the RSI goes above 70, it's a guaranteed trade. But the real truth is, indicators strengthen a pre-existing notion. They don't make decisions on their own. In this chapter, the author focuses on three main indicators: MACD, RSI, and stochastic. The right combination of these three tells you when a trend's strength is increasing and when it's weakening. MACD shows you the internal strength of the trend. RSI tells you whether the market is overbought or oversold. And stochastic tells you how long the price has been in the upper or lower part of its range.
But the biggest truth in the world of indicators is that no signal is 100% reliable. This is why the author repeatedly emphasizes using more than one indicator, but in a way that they support each other's decisions, not contradict them. To understand this, the author gives an example. Suppose the MACD is cutting upward, the RSI is above 50, and the stochastic is also moving upward. Together, these three give a strong bullish signal. But if the three are in different directions, it will increase confusion, not profit. The author makes another extremely important point: the combination of indicators with time. Many people use indicators on small time frames, such as 1 or 5 minutes, and get entangled. The author explains that indicators are more reliable on larger time frames because there is less noise and more impact. This means that if you use MACD or RSI on a daily or weekly chart, they will give you more accurate and stable signals. Another deep subject emerges in this chapter: the combination of indicators with emotions. Many times indicators are a reflection of market sentiment. When the RSI gets very high, it doesn't mean you should sell immediately. Rather, it means that greed in the market has become too high. And when indicators show you fear, it's not necessary that this fear is real. It could just be an emotional noise. So the author advises never to look at indicators alone. Read them in combination with price action and volume. This discretion will save you from unnecessary traps. Now let's get a little practical. If you put MACD on your chart and it shows you a bullish crossover, but at the same time the RSI is above 70 and the stochastic is also in the overbought zone, it could mean that the movement will go higher, but not for a long time. This means either taking a quick profit or setting a loss limit. This is the author's real power. He is here to teach you, not to tell you how every signal can work for you. One thing resonates throughout this entire chapter. Indicators show you the way, but they don't make decisions for you. You have to make the decision yourself by trusting your own experience, your own practice, and your own mental strength. And when you correctly understand these technical tools, they become your best friends who show you the right path without saying anything.
Chapter 7. Self-discipline. The path to becoming a successful trader is never simple. This path is full of twists, falls, and ups and downs, but if you have self-discipline, if you can control your mind and emotions, then you can win this difficult journey. This self-discipline is the soul of this chapter. The author teaches us that the most essential thing for success in the market is not just technical knowledge, but the mental strength with which you can defeat greed, fear, and self-doubt. Let's imagine you have taken a trade on a stock according to a strong setup, but the stock starts moving in the opposite direction. Now what will you do? Will you get scared and close it immediately, or will you hold on to it out of stubbornness, thinking it'll come back? Most traders make a mistake here. They fall into the trap of emotions. The author says that self-discipline means following the plan you have created, no matter how much fear there is. A professional trader knows that not every trade is for winning, but for managing every trade correctly. The main mantra of trading is to keep losses small and make the opportunity for profit big. This is possible by trading with discipline, such as following the rules of entry, exit, stop loss, and position size. But rules are only effective when you follow them.
Whenever you break those rules out of fear or greed, you start working against your own system. The author advises keeping a trading journal. Write down why you took each trade, at what price, why you exited, and what your mental state was at the time. This diary will become a mirror for your inner state. You will see where your biggest mistakes started. It's not a technical weakness, but a mental weakness. Mental discipline means staying calm in all situations. Whether the market goes against you or in your favor, you should always work with a steady mind. The author explains that if you have decided in the morning that you will only take 2 trades and move away from the market after a certain limit, there is no point in breaking that rule. Sometimes not trading at all is the best trade. This sounds easy, but it is only possible when you can recognize your own greed and control it. The author also says that we should not match our self-worth with the results of a trade. If you make money from a trade, it doesn't mean you're a genius. And if you have a loss, it doesn't mean you're an idiot. You are the same person. It's just that this time the market wasn't in your favor. If you can accept this thought, then just as a bodybuilder builds their body, a professional trader builds their mental discipline. And this is not just done by looking at charts. It is done by repeating your plan every morning and reviewing your trades every night. The author advises that when you are on a losing streak and are mentally tired, it is wise to take a break. This not only restores your mental strength, but also saves you from big losses.
The truth is, no system or indicator works unless the person using it is self-disciplined. You might be thinking, can self-discipline be learned? The answer is yes, of course. And it starts with small habits, like sleeping and waking up on time, following a specific routine every day, staying away from the phone unnecessarily, and taking responsibility for making yourself better. These habits will slowly transform you into a trading warrior, and when you're mentally strong, every storm in the market will feel like just a wave to you. Chapter 8: The Psychology of Trading. People who survive in the market for a long time do not just rely on technical signals or emotions. They deeply understand themselves, their habits, and the psychology of the market. In this chapter, we will talk about that depth, which the author calls the psychology of trading, what goes on in our minds while trading, and how it influences or destroys our decisions. No matter how much you know about reading charts or creating strategies, if your mind is not in control, you will repeat the same mistakes over and over. The game of trading starts from within, not from the outside. Here we are talking about that inner war, the fight between greed and fear, the swing of hope and despair, and that self-dialogue that echoes inside us before every entry and exit. The author says that most traders fail because they ignore the weaknesses of their own minds. They never ask themselves, why am I taking this trade? Is it based on logic or just on fear or greed? Am I in this position because I am following a plan or just in the anxiety of correcting a previous mistake? To become a successful trader, it is most important to understand that the real enemy of trading is not the market, but our own mind. You have to catch those emotions that destroy your decisions, such as suddenly getting scared and closing a position for no reason. When you win a trade, a feeling of pride comes inside you, which makes you overconfident the next time. And when you lose, a kind of insecurity is born, which makes you want to compensate for the loss at any cost. This feeling gives birth to revenge trading. So the author has advised keeping an emotional journal after every trade. You will not just write what you bought or sold, but also what you felt at that time. Were you scared while taking the trade? Did you take the trade because you had a previous loss and you wanted to make up for it? Did you take this step by following someone else's advice? The human brain often wants quick gratification, but the desire for quick profit is the biggest trap in trading. The author calls this the immediate gratification bias. You want that as soon as you press the button, the share price goes up and you make a profit. But the market doesn't work that way. Here, waiting, sticking to discipline, and keeping your mind calm is an art.
If you really want to be a professional, then you have to maintain an emotional distance. That is, separate your decisions from your emotions. When you don't have hatred or fascination for a trade, only then can you make the right decisions. An experienced trader never gets emotionally attached to their trade. They just follow the plan. For this, the author asks us to do a powerful exercise. Every time you're about to take a big trade, ask yourself 3 questions.
Is this trade according to my strategy? Am I emotionally attached to this decision? If this trade goes against me, am I mentally prepared? If the answers to these 3 questions are balanced and clear, then you move forward. Otherwise, stop yourself. And this stopping will be your biggest strength. Another powerful message of this chapter is that trading teaches you about yourself, which maybe nothing else can teach. It tests your patience, your fears, your hopes, and your limits. When you analyze your inner fears and greed, and then come to a state where you react to the market not with emotion but according to a plan, then you have won half the battle of winning against the market. The summary of this chapter is this: before fighting the market, win the fight within yourself. For a successful trader, 2 things are important: your strategy and your emotions. And this is where the biggest test is. Are you the master of your mind, or is the market playing with your emotions? In this chapter, the author teaches us that to become a professional trader, it is not important that you have knowledge about every indicator. But what is important is how well you know yourself, how much you understand your behavior, and most importantly, how much you can discipline your mind. We all know that greed and fear are the biggest enemies of trading. But when you sit in front of the screen and a trade starts going against you, your brain immediately goes into fight or flight mode. You may close the trade out of fear or put more money into it out of greed. This is the place where trading is not just a technical game, but becomes a mental war. The author teaches us how to win this war by keeping our minds calm and bringing every decision into a systematic framework. After this, the author talks about the trapping mindset. Many traders, when they get success at the beginning, start to feel that they have become invincible. They start ignoring their setups, take risks lightly, and think that now they can beat the market. But this overconfidence leads them to big losses. The author tells us that staying in control even after success and seeing every day as a new beginning is the real professionalism. After this comes the rule-based mindset. A professional trader takes every decision under a rule: when to enter, where to put the stop loss, what the quantity should be, and when to get out. These rules are written in their trading journal, and they stick to them emotionlessly. The author says that just as a pilot goes through a checklist before every flight, a trading professional also has to go through their strategy and mindset checklist before every trade. Another important thing in this chapter is learning to live with loss. Many people are afraid of trading because they take loss personally. But the rule of the market is that loss will happen. The only difference is whether you are taking it as a small injury or as a heartbreak. A professional trader considers loss as a necessary cost, like the cost of raw materials in a business. If you make loss a part of your identity, then you will not be ready for the next trade. The author has a beautiful message. Every loss is teaching you something if you are ready to listen.